Dirty dealings, corporate battles, consumer woes. This is Evening 5. Sarawak is considering consolidating its state assets, businesses and investment arms under one entity. These include the likes of Petroleum Sarawak, Sarawak Energy and the newly set up RM8 billion Sarawak Sovereign Wealth and Future Fund. Sarawak Premier Tan Sri Abang Johari Tun Openg said the move will see the consolidated entity adopting a model of assets and investments management with the member bodies as shareholders, which is run like any other business body with the main purpose of lifting the state's revenue for the long term. The consolidated entity would work much like similar entities in other developed countries such as Singapore's Temasek Holdings and the Government of Singapore Investment Corp, Mubadala Investment Company of UAE, China Investment Corp and Japan Investment Corp. The state's investment branch is now under Sarawak Inc. According to him, a study will be carried out by experts to determine the proposal's feasibility. Abang Jo, as he is affectionately known, said this at the closing of the 3-day Sarawak Civil Services One Team Retreat held in Brunei in conjunction with the launch of the Sarawak Trade and Tourism Office, Brunei. He added the consolidated entity would provide an atmosphere conducive to the mobility of professionals among the member bodies along the principle of hire and fire to ensure that the bodies were well run. Such a model, he said, would also enable remuneration to be set at a high level and comparable to those in developed countries. MyEG Services blockchain developer Zetrix has unveiled a digital identification verification service for Chinese nationals on the ZCert service. Through the ZCert service, Zetrix now simplifies and facilitates electronic Know Your Customer or EKYC processes for entities outside of China wishing to verify the authenticity of information contained in the digital IDs presented to them by Chinese nationals. MyEG Zetrix is the international supernode for China's national blockchain Singho BIF. The digital ID marks the latest enhancement to the ZCert platform following the introduction of a service earlier this year that allows for the digitization and international verification of Chinese driving licenses, according to MyEG statement. MyEG MD T.S. Wong said that the group is excited about the introduction of this cross-border digital ID service as it enables a new wave of services powered by smart contracts. He added that its Chinese digital ID application combined with Malaysia's national ID and World ID and future sovereign IDs makes ZCert the most comprehensive global digital ID solution. Malaysia may miss its own budget target next year amid potentially lower government revenue and higher operating expenditures, CGS International warned on Thursday. Fiscal deficit as a proportion of economic output for 2025 will likely come in at 3.8%, above the 3 to 3.5% target set during the 12th Malaysia Plan's midterm review, CGS said. It added that OPEX is expected to rise while development spending could fall. This year, the government is targeting to narrow its budget gap as a proportion of gross domestic product to 4.3% from 5% last year. The government has trimmed subsidies, including on electricity and diesel, that could generate some 8 billion savings to the government annually, only to later announce an increase in civil servant salaries totaling 10 billion ringgit. CGS explained that the options are clear but not necessarily easy to either raise revenue or find ways to cut spending. The research house added that either option could negatively affect the consumer base. CGS thought that the goods and services tax has a high likelihood of making a comeback, as it is crucial to improving the government's finances. If GST is not implemented, the government could turn to subsidy adjustments to the widely used RON 95 fuel as a trade-off, which could cut its expenditure by as much as 16 billion and shave off 0.8% percentage points from the fiscal deficit without any support measures to consumers. Odds are low for now, and the research house is not factoring any savings from RON 95 subsidy rationalisation. Still, CGS urged the government to seize the opportunity from narrowing price difference between subsidised RON 95 and the market amid stronger ringgit and falling oil prices. Bank Negara on Thursday said that domestic financial institutions, including insurers, remain supportive of economic growth amid resilient businesses and households while the ringgit strengthens. Business resilience is expected to improve further in the second half, in line with the projected economic growth, BNM said in a statement in conjunction with the release of the Financial Stability Review First Half 2024 report. Input costs are expected to ease amid lower commodity prices and the appreciating ringgit. Household resilience, meanwhile, continue to be supported by favourable economic and labour market conditions. The banking system's aggregate total capital ratio, which includes other forms of capital such as subordinated debt and hybrid securities, stood at 18.4%, with capital buffers of 136.1 billion over the regulatory minimum. The central bank also took note of financial institutions' continuous efforts to support the financial system's operational resilience through strong operations risk management and fraud control. The insurance and takaful sector, meanwhile, built up an aggregate capital adequacy ratio, a measure of balance sheet strength of 227% and excess capital buffers of 37.4 billion ringgit. Deputy Governor Jessica Chew said that BNM continues to raise standards expected of financial institutions in response to new and emerging threats. These include introducing enhanced expectations on managing risks posed by third-party service providers. The central bank also highlighted that further growth in cross-border QR payment volumes as transactions in the first half have doubled the total volume recorded for the entirety of 2023. Lei Hong's former JV partner NH Foods has ceased to be a substantial shareholder in the company after disposing of 62.32 million shares or an 8.24% stake. According to a boss filing, the shares were sold via an off-market transaction on October 2nd. While the selling price was not disclosed, based on Wednesday's close of 40 sen, the stake would be valued around 25 million ringgit. Following the disposal, NH Foods' shareholding in Lei Hong has been reduced to 4.82% from 13.04%. Founder and Executive Chairman Datuk Yap Hung Chai is Lei Hong's largest shareholder, holding direct and indirect stakes of 7.52% and 24.55%. respectively. Back in 2016, Lei Hong and NH Foods formed a 49-51 JV to produce halal food using Japanese technology, primarily for export to the Middle East and Southeast Asia. However, NH Foods exited Malaysia, selling its stake to Lei Hong for 1 ringgit. Lei Hong recently posted a more than threefold increase in net profit for its first quarter to 13.4 million ringgit. Its shares closed 1 cent or 2.5% lower at 39 cent, giving it a market capitalization of 291.62 million. Year to date, the stock has appreciated by 30%.